Welcome back, and joining us from GJEPC is Sabyasachi. Sabya, thank you so much for joining in. One after the other, there is some new notification or a legislation that hits the jewelry sector. I want to first start with what really came overnight, which we are reading slightly delayed by a week really, on how US perhaps will put tariffs now on gold kilobars and 100-ounce bars as well. This comes in from Switzerland, and this has led to a huge price disparity in the global markets. How have you read into this? Mr. Ray, can you hear me?
Yes, I can hear you. Thank you, Manisha. Sorry. So, this one thing, every day you are doing that what the gold price trends, how it will move, where it will move, etc. This new dimension will put an interesting, dimension into the pricing also. Before, throughout the world, gold was traded. Usually, gold is a raw material. So, throughout the gold was traded with, other than India, etc. The gold bars were at zero duty, throughout the world, including US. So now, after this reciprocal tariff notification, what we had noted, and also we have told to your channel, that there's an Annex 2 where certain goods have been given waiver of this reciprocal tariff, so duty. However, recently what has happened, in fact, yesterday only or day before yesterday, there's a customs ruling which has come. And US, including Mr. Trump, had also told that they want to be the refiners to the world. Throughout the world, we know that Switzerland holds one of the largest refineries in the world. I think 30 to 40% of the gold refining happens in that country only. US also have refineries, but one ruling has changed. I'll explain to you how it has changed. See, there are two HS codes, harmonized system codes, based on which the customs put the duty. In US, the ruling has clarified that 7108.135500 is the one which will be in Annex 2. That means which is under waiver. That is other semi-manufactured forms of gold. However, gold has been always exported by Switzerland, including in India. It is imported under the code 71028.1210. So this 1210 now has been put under 39% import duty reciprocal tariff, which is applicable in Switzerland, and that has been clarified by customs. So overnight, the Swiss refined gold in US has become, 40% or 39% higher in price and etc. And because of that, the Swiss refiners had held back their supplies, creating a huge disruption in the gold supply chain in the world. Because the COMEX shows one of the largest volume of gold in the world from where it is traded. So this is what has created the disruption.
Mr. Ray, this is clearly the last in the list, really, and thank you for explaining that. And well, if US wants to be the refiner to the world, I'm assuming that it will not happen overnight, and we might be looking at disparities staying on for some time. But the other concern really comes in from the diamond guys. I mean, with this 25% and now 50%, I mean, I remember the previous conversation I had with GJEPC that 25% itself was a bit of a problem. The margins were absolutely getting squished and squeezed. With 50% on whether or not that happens, but that date is not too far away. The diamond business, how are you looking at those numbers now? Because loose diamonds, a lot of your members have stores in US. How are you dealing with this now?
See, Manisha, again, just now as you have told, in the world, as I told, that if 30 to 40% of the gold refining happens in Switzerland itself, in diamonds it is around 85% or somewhere around 90% of the gold cutting and polishing, diamond cutting and polishing is happening in India itself. So overnight, it cannot be replaced, as you have just told. However, the business will not be viable with a 50% tariff because diamond pricing, as we have already explained, that as it is very high price good, percentage does not work. Now, if it is equally tariff, like, let's say your food grains or etc., it cannot hold because that is what is the issue, that in the consumer level, it cannot be traded, it cannot be sold with a 50% tariff range or overnight increase in price. So this is where we are right now, and we had calculated with 25% how much business loss, how much level loss, etc. all will be happening. But with 50%, there is no calculation. The business is a no starter. That much I can tell you.
So where we stand right now, and again, July wasn't so great. 50 to 75% of a decline to U.S. export. August, I'm assuming, could be much lower, would you say, Mr. Ray? And what is the sense right now? How are you dealing? How are you talking to your consumers in U.S.? What is the quantum that you see happen for the month of August for jewelry exports?
See, Manisha, give us some time. What I think the first numbers which is coming out, right now I'm not confirming. You give us another 5-6 days. In July, surprisingly, the export has picked up.
Okay.
So where it has picked up, how it has picked up, we're still analyzing. But of course, after this August with 25% after 7, see, 6th of August, whatever has gone, of course, it has happened the same way it has happened previously. People tried to move in their stocks in US. That is one of the story. But after that, whatever business is there, I do not believe with 25%, other than very select business, it will happen.
Okay.
So the export will, of course, nosedive. And after 21st August, I cannot think about that. I think export may be totally stopping this, in US at least.
Well, we still have time, and there is an expectation that negotiations will happen, and perhaps there would be some commodity that would be exempted, and perhaps diamond could be one of those. But Mr. Ray, as always, thank you so much for joining in.
Absolutely. Thank you so much, Manisha, as well as Mr. Ray, for joining us. An interesting conversation there. But, on that note, we're going to sip into a very short break, viewers. Don't go anywhere. We'll be back with more news and updates, more stock-specific action after the break.